Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Let's take a look. The S&P 500 now up 31.65. 10-year Treasury down 6 basis points, 3.765. Mortgage-backed securities are up 30 basis points. That's good news for people that are thinking about buying a home or refinancing or protecting their equity. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Yesterday, 30-year conforming loans locked at 6.605. The 30-year jumbo, 6.526. 30-year FHA, 6.521. The USDA is locked at 6.58. And the 30-year VA loans, that's for the best of the market, best loan on the market for those that earned it, 6.323. That is all according to what OBMMI is reporting. Not saying that you're going to qualify for any of those, not even offering any of those to you. But that's what OBMMI is telling us. And the question becomes why? Because all that information is available on the super secret website, google.com. So this morning, stocks and bonds both higher to start the day. Some of the recent economic data, like retail sales, has shown that the consumer is remaining resilient. But is it a grand illusion? And how are consumers continuing to spend in this higher inflation environment? The answer, I guess, if I was prepared here, I would have the drum roll going. And yes, I do have the drum roll going right now. So how are the consumers continuing to do this? Credit card debt. It's up 15% over the last year, the largest jump since 2001 recession. Additionally, servicing that debt has become more difficult as rates on credit cards have jumped 2.75% due to the Fed fund rate hike, up 2.75%. The other components is savings. Savings rate has dropped to 3%, which is the lowest level since 2008-2009 recession. And yeah, we've also talked, as you know, we've talked about this a bit, inversions. That's on the yield curve, which is a sign of weakness in the economy and a recession to come. We recently just saw the longest maturity bond, the 30-year, and the shortest maturity treasury, the 1 month, invert. That means you get more money when you give them your money for a month than you get for the 30 years. It shouldn't be that way. This has only happened 2 times in history, and each time we saw a recession shortly thereafter. We're also watching right now because inflation is obviously the issue of the day. Well, with a potential rail strike, well, that could cause more inflation because it becomes a shortage of goods. So one of the nation's largest rail unions voted to reject their labor deal. BLET, another large rail union, voted to ratify the deal, but said it would strike with any other unions that voted against it if there's not an agreement met. The strike date is currently set for December 5th. If this date is kept, then strike prep would begin on November 28th, which is the day the Senate comes back from Thanksgiving break. A strike like this would have an estimated negative impact of $2 billion per day and would not do any favors, again, for inflation, which is obviously what we're watching significantly. Thanksgiving coming up later this week. There's going to be a lot of data coming out tomorrow. So the most important of the data is new home sales, the Fed minutes from November 2nd Fed meeting. Historically, days the Fed minutes are released are tough on the markets, especially with how tough they have been talking on inflation and destroying the demand side of the economy. We'll also get mortgage applications, durable goods orders, and initial jobless claims. All of that comes out tomorrow. And as we've seen right now, and we're seeing it right again today, that the bond market is pretty favorable for us right now. As I mentioned earlier, well, it's coming back a little bit. The mortgage-backed securities are up 25 basis points, which means that it's a slight benefit benefit decrease in the mortgage rates. You may not see it on any kind of rate sheets right now, but we'll talk about that more in just a second. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. 800 306 1996.